Good afternoon. Thank you for joining us on Power Lunch. This is Bloomberg Quint and I'm Menaka Doshi. Here are the day's top headlines. Indian markets are back in the green after 6 days. Energy stocks leading the rally today. All economists polled by Bloomberg, except for one, expect the 6-member Monetary Policy Committee to stay put on rates. The Supreme Court has quashed 88 iron ore mining licenses renewed by the Goa government. It has ordered fresh environment clearances before these mines can be reallocated. And we're watching out for Aurobindo Pharma, Cipla and Eicher Motor earnings today. So those could be in any time now. Well, let's get straight to the markets. I'm not sure, Neeraj, I want to complain about the fact that we aren't seeing much movement, at least at this point in time. Just the fact that the volatility seems behind us is good news.
Yeah, so two ways to look at it. Yes, the VIX is behind us, it's good news. But yesterday, looking at the Dow, one would have thought that we will start off 1% higher and probably stay that. So we did start off about 1% higher. But no, unfortunately, as is the rest of the Asian case as well, we've gone off the boil quite completely. OMCs seem to be doing, the volumes as well. I think it'll be interesting to see what the volumes are in today's session. Remember, in yesterday's session, the trade volumes, the F&O volumes almost reached the levels at which the weekly F&O expiry volumes reached. So the volumes had shot up dramatically in trade yesterday. In today's session, they seem to be a bit off, especially the cash market volumes, much lower than what we see at around this time. So the trade is probably a bit sedate ahead of the policy. You would probably blame it on that.
They probably ran out of breath after yesterday.
Maybe
right?
that too, yeah. So that is one. And two very select pockets moving up. So OMCs and HPCL in particular doing well. Again, I was just speaking to Sumit before I came in as to if there is any trigger. No visible trigger, but for the fact that the government has said that if crude crosses 70, then they'll further cut the excise duty and maybe that helps the OMCs, but no visible trigger. HPCL is on a roll, the others not quite really. But yeah, that one is standing out as a big mover. IT hasn't had a great day, so keep that in mind. And the broader end of the spectrum, a lot of stocks reacting to results, Menika. I thought two pockets to watch out for. One, Natco Pharma, the results disappointment and the slam dunk that it has had on the BSE mid-cap or the NSE 500. It's the top loser, down about 6.5, but was down about 8.5 at a point of time. So this one stands out as a sore thumb. Watching out for the sugar names, the talk of some policy announcements coming out. There's already one that has come about, which is that import duty on FDI, and the stocks have reacted duly already. Let's see if the cabinet clears some more. It's a rumor in the markets. Let's wait and watch if it happens or no. The markets actually reacted to that rumor early in the morning. The stocks have come off. If indeed something comes about, then maybe we'll see some reaction.
Realty is having a good day today, isn't it?
Yeah, a bit of a bounce for a lot of stocks. So Tata Global, etc. A lot of stocks which got beaten down and were in the interest of the buying have come back today. But let's see if it lasts, because the markets, if it's any giveaway, are certainly not carrying on with the momentum that was shown early morning.
All right. Thanks very much for that, Neeraj. That's a quick check on what's going on with markets. But of course, today's the day when the Monetary Policy Committee announces its decision on interest rates. Now, this is the final meeting of this financial year, and it doesn't make the 6-member committee's job any easier, especially in the backdrop of what we've seen happen over the last week or so. First the budget and then the global market volatility. So what are the factors here at play that will influence the committee's decision, and what could be in store at 2:30 p.m.? Radhika standing by at the Reserve Bank of India with more on what to expect this afternoon. Let's listen in.
The monetary policy debate has shifted quite rapidly over the last 6 months. If 6 months ago the debate was around what you needed to do to support growth and ensure we get back to pre-demonetization, pre-GST levels, the debate over the last 3 months has been how you need to protect against a rise of inflation once again. This time around, again, you will see a shift in the debate focused entirely on inflation and the fiscal impact perhaps on inflation. So what you're expecting the monetary policy to do is practically nothing. Only one of 33 economists polled by Bloomberg News said that there would be a change in rates, and this time a hike in rates, but more or less consensus across the board is that there would be no change in interest rates this time around. In terms of the statement, the expectation is that the MPC would continue to warn about upside risk to inflation. The question is whether they start to use stronger language on that upside risk, and if that then points to an upcoming interest rate hike perhaps in the next 6 months, or at least in the course of the 2018-19 financial year. Some people believe that you will see at least one, if not two, rate hikes in 2018-19. 2019. Not everybody agrees with that. So the first thing to watch out for will be the language on inflation, will be the language on fiscal policy. How harsh is the MPC on the government's decision to push back the 3% fiscal deficit target to FY21? We'll be watching out for that. There is, of course, there are a couple of other issues to focus on. One of them being a slightly narrow one of the government's decision to change the MSP policy. Want to see what the MPC's view on that is, because the market is divided as to whether it will be inflationary or it will be non-inflationary. There's also the issue of the bond markets in particular. Bond yields have been elevated. Does the MPC take note of that? If so, in what context? Are they saying that that could be a hindrance to a revival in growth, or are they just seeing that as a technical impact of the fact that credit growth has picked up and banks are now unwinding their excess SLR portfolio? So those are some of the things you'll be watching out for. In terms of the voting pattern, again, it'll be interesting. We were joking earlier today with some money market participants as to whether we'll see a three-way split in the six-member MPC with Ravindra Dholakia, who's been the dove, continuing to vote for a rate cut. Michael Patra, who's been the hawk, continuing, or actually for the first time, voting for a rate hike, with the others staying on status quo. Most likely you will not get that three-way split, but there is some talk of a two-way split with Michael Patra voting for a rate hike and the others voting for a status quo. We'll see if something comes out of that one. Final note on what to watch in the commentary. I think apart from the monetary policy issues, there are a couple of outside issues. One in particular, which we're hoping to speak to the governor or ask the governor about, is this debate over whether the RBI is giving the government more dividend or not. We still haven't heard the last word there. So if possible, one of us will try and put across a question to the governor. 2:30 is when the policy gets announced. 2:45, the press conference begins.
All right, that's Ira reporting from outside the Reserve Bank of India. She'll be back at just around 2:30 to chat with us on the policy itself. But now let's get you an expert voice. Radhika Rao, economist at DBS Bank, joins in with her thoughts on what to expect from the policy. Radhika, can you list for me the 3 or 4 things that I should be looking out for in the policy text itself that will be key indicators for you on what's to come in the rest of the year?
I think in the past, since last week, much of the emphasis has completely been on the budget and what budget means for monetary policy. I think the list for me will be on predominantly what's outside the budget as well, which is where the oil prices are headed, despite the excise duty cut, how the inflation has been panning out, even is higher than where the central bank projections are. So to what extent will inflation numbers be revised up? And to do with the budget, I think it's going to be more to do, like your colleague just mentioned, it has to do with what the minimum support price increase means for them. Do they expect it to be inflationary, especially tending on inflationary expectations, and push back in the fiscal consolidation goals? Personally, I don't think, keeping the fiscal deficit revised targets below 3.5% is an indication that there is an element of prudence in the budget calculations to mean that, it's not completely out of track. Consolidation is still a priority. It's just that the gradient is going to be slower. But the budget measures, particularly the MSP, I think will receive a mention from the government, from the central bank. But details are scant still, so I don't think they will be able to show an impact on inflation per se. But yes, what a factor to be watched out for. So
okay.
I think domestically, I would talk about the budget, the oil, and the
oil
inflation.
Oil is tough for anybody. No, I'm sorry to interrupt you, but what I meant to say is that oil is tough for anybody to estimate. I'm curious to know what you expect in terms of the revision on the inflation estimates itself. Do you have any numbers in mind?
Their numbers as of December were 4.3 to 4.7%. As we know already, that the December number came closer to about 5.2. So I would think that a 4.5 to 5% for this quarter is a projection one can work with. In fact, from December to January, I think there is going to be a slight slowdown in the inflation number, in the headline inflation number. I was just looking at some of the agri prices, and some of the vegetable prices have slowed. So I think declined. So because of that, I think you will see the inflation number tick down a bit. But overall, I think 4.5 to 5.2% will be the range that they'll work with. That's on the inflation front. And I think on the growth as well, GVA at 6.7% for this fiscal year is optimistic, given given the evolving trend. So I think that might be lowered as well, probably closer to 6.3, 6.4%.
Okay, fair enough. Yeah, you know, I just wanted to ask, Radhika, which side of the debate you stand on with regards to the impact of the budget pronouncements on minimum support price and its impact on inflation in the rest of the year. And there are people who believe it will have a meaningful impact on inflation, and others who believe that, you know, since given that many crop, prices, MSPs are already at those levels as prescribed in the budget, the likely impact is going to be limited, especially only in the case of maybe paddy or something like that. And even then it will have a limited impact on inflation. Where do you stand here?
I think I'll be in the camp which expects a bit of impact on the inflation numbers. Like I mentioned before, the details are not out yet in entirety. So in terms of percentage increase, what does it mean from the present regime where we used to have a fixed MSP? And I think it's also interesting that the rural incomes will get support, because the government is also assured that if the market prices fall below the MSP, then they would step up, or the state governments will come in and bridge that gap. So to some extent, I think the MSPs and also some other measures in terms of demand pickup from the rural part of the economy. So yes, I would fall in the camp looking for a modest increase in inflation because of MSP, but I will still await the actual numbers. I think it's also not only direct impact, it's also what it means for inflationary numbers, inflationary expectations, and also generalized price pressures, right? You have, if MSPs feed into demand side pressures, what that means for inflation outlook going forward. So expecting certainly some bounce up in the inflation outlook 6 months.
Okay, so you said that you expected the RBI to revise its inflation number from 4.3 to 4.7. To 4.5 to 5%. I'm just curious, in that band, are you already factoring the MSP impact, or do you think that will be over and above this and the RBI will actually move up the band irrespective of the MSP impact, because that might only come to light a little later in the year?
So when I say 4.5 to 5%, I meant the fiscal year 18. That's the number that they have, and they have 4.8 number for March 2018 quarter. Yeah. Certainly, I mean, this would be devoid of, excluding the MSP increase. In fact, I think the oil projection in the RBI books is also at about 55. So the present numbers are, present trend is 65, 70. So that also needs to be revised up. So I think MSPs will be left out of the calculation. I think a higher oil, as well as the evolving inflation trajectory, will itself leave inflation numbers a bit higher than where they are now.
Okay. There is, of course, debate on whether the RBI will simply signal through language that the rate cycle has turned and here on we should anticipate higher rate cuts, or it will signal through language a status quo on rates till it's able to read all the very conflicting forces in the economy better. What do you expect?
I think the language will be the latter among the two cases that you laid out. So I think there will be an emphasis that they are keeping rates on hold. I don't think there'll be a clear assurance that there are going to be rate hikes in the corner. I think they will still talk about data dependency, evolving inflation outlook, and optimism on growth, especially for fiscal 19. That that 7% plus 7% plus kind of real GDP numbers or GVA numbers, where they see growth coming back. What that means for inflation, but I don't think they will mention an urgency to hike as yet. At the same time, I think there will also be a mention of the global factors, especially the volatility in the past few days, the high bond yields domestically, and equity markets that were shaken by some of the budget measures. So global as well as local factors being mentioned. I think the indication will be hawkish, but I don't think there'll be a timeline put on rate hikes in particular. I think it will be still an evolving trajectory that they would prefer.
All right, Radhika, we appreciate you joining us. Thank you very much. We're just moments away from that RBI announcement or MPC announcement. As it fairly is from here onwards, we will know more at 2:30. Let's move on to the other big developing story this afternoon. The Supreme Court has decided to reject all iron ore mining renewals that were handed out by the Goa government. The order, which will impact players such as Vedanta, who have a big presence in the state, has called for fresh tenders on all 88 mines. Arpan Chaturvedi, who was in the courtroom when this order was read out, joins us now from New Delhi with more on what to expect. Arpan, you also did manage to speak with the counsel on the case, Prashant Bhushan, who represented the petitioner who asked for the quashing of this renewal of licenses. What can you tell us about what happened?
That's right, Menaka. So the challenge, or what the subject of challenge in these proceedings were the renewal of licenses that were granted, or the leases that were granted in the year 2015, and this NGO called Goa Foundation had challenged these leases that were granted on the grounds that there were procedural irregularities. Mr. Prashant Bhushan was, of course, arguing for the petitioners, and in the judgment that the Supreme Court has come up with today, is the court has said that these licenses or these leases were granted in unduly haste, did not take all the relevant material that should have been considered before the leases were renewed, and that it is not in the interest of mineral development. And on those grounds, the judgment basically says that all the renewal leases are stand quashed. The mining cannot continue under these leases that were granted after March 15, 2018. So that will be the last day till when mining can at least continue. Post that, there will be a pause on all the mining activities in Goa until the government grants fresh leases. And of course, they have again made it clear that this time it should not be a renewal, but that a fresh leases should be granted as far as these particular leases which have been cancelled after the Supreme Court's order today.
Any timeline, Arpan, that the Supreme Court has laid out for when the fresh leases have to be put out or granted?
We've just the detailed judgment has just been uploaded a few minutes back, and as far as we know, right now there's no specific fixed timeline laid down by the Supreme Court.
All right, appreciate that. Arpan, thank you very much. It's an important story. We're getting you an expert voice in on it. P.K. Mukherjee joins us now. He's the former managing director at CESA Goa, one of the companies that is likely to be impacted by this Supreme Court decision. Mr. Mukherjee, first up, the Supreme Court seems to have cancelled yet again, if I may put it that way, because there have been actions in the past against these very same companies getting mining leases or mining rights. And it now seems that, all of this mining will come to a stop, iron ore mining will come to a stop in Goa?
Yeah, that is apparent from the all the reports what I am getting.
Right.
Although I am not privy to the judgment yet.
Correct. So from our understanding, about 20 million tons per annum of capacity is impacted. Is that correct?
20 million ton was the approved capacity for the Goa as a state as a whole, was approved by Supreme Court only in 2014 judgment.
Okay.
So that was lying, I think, already for upscaling to 30 million ton based on the Supreme Court appointed committee's recommendation itself.
Okay.
Which Supreme Court is not yet decided for last more than a year. I think it is almost 2 years now that Supreme Court appointed committee has submitted its report. And Supreme Court itself had ordered in that 2014 judgment that pending the receipt of that report, expert committee report, 20 million ton will be the limit.
We understand that almost 5.5 million tons per annum of that is Vedanta or CESA Goa, the company that you formerly used to lead, sir. So this will have a critical impact on CESA Goa or Vedanta?
See, today, almost 4 years I am out of the company. I cannot comment anything.
You do know where this mining happens. Those things don't change so quickly, right?
Yeah, so 20 million ton was divided between various mining leaseholders in Goa by government. And I was also told that Vedanta, that is earlier CESA Goa, was having 5.5 million ton of capacity approved out of this 20 million tons. So naturally that will be impacted along with the other leaseholders.
When you say impact, can you give us a better sense or elaborate on, is there any alternate source that, CESA Goa or Vedanta will be able to make up this shortfall from, or will this in effect then also impact, financials over?
So this much of revenue definitely will be impacted according to the prices prevailing in international market of the low-grade ore which is being exported from Goa, that is less than 58% AP, and on average 57% AP exported by the Goan people, the Goan miners. So on an average, if you take 25 to 30, even on the higher side, $30 per ton is the revenue. So 30 into 20, $600 million, or roughly about 4,000 crores of foreign exchange will go up, and to that extent, trade deficit also will be impacted.
Almost all of this 20 million tons was being exported, right, Mr. Mukherjee? That's why you're saying 4,000 crores.
Yeah, except for a small quantity which Vedanta itself wants the current plant they have.
Okay.
So that is to be consumed. That is a very small quantity.
Okay, so you're saying that, I mean, there will be a 4,000 crore rupee impact in terms of foreign exchange that the country earns because of the stoppage of these exports. There will also obviously be the subsequent impact on Vedanta's financials because this 5.5 million ton capacity, or rather amount, will no longer operate. What will be, do you see this having any impact on local iron ore prices?
No,
because we've already...
I must add that 4,000 crore is the top line. So at the moment, the price level in the international market hardly gives any profitability. That's what my understanding is to the Goan miners. Very marginal profitability. And along with 4,000 crores, about 500 crores or so impact will be on the government revenue, state government revenue in the form of royalty and other district mineral fund, etc. So that will be going. And the biggest thing is that this 4,000 crore revenue has got a multiplier effect in the Goan economy. So that will be a huge impact on the Goan small state's economy. That is for sure.
I understand that, sir. I just wanted to know, while much of this iron ore is exported, as you pointed out, will the elimination of this capacity have any impact on domestic prices? Because we've already heard of steel companies complaining about the fact that, supply of iron ore from Orissa has been, equally hampered because of Supreme Court orders. And so I was just curious to know whether you think it might lead to a tightening of prices at all in the local market.
No, I don't think Goan iron ore has got any impact on the domestic market of iron ore, because there are no takers in the domestic market for Goan iron ore because of its low grade, or rather easy availability of the very high quality iron ore at a much cheaper price to the domestic steel companies from Odisha as well as Karnataka and Chhattisgarh.
Okay. And one final question, sir. Besides Vedanta, which are the other companies that are likely to be impacted?
No, one is the VM Salgaonkar. Except Vedanta, nobody is in the listed category.
Yeah, I understand
so VM Salgaonkar is there. Then Fomento Group, they are there. Then there are various other small companies will be impacted.
All right. Mr. Mukherjee.
Chogle and company will be impacted.
Chogle is there as well. All right. We appreciate you joining us this afternoon, sir. Thank you very much for throwing some light on the the implications of this Supreme Court decision. As Mr. Mukherjee pointed out, it will have an impact on the state economy. But of course, there were outweighing factors that led the Supreme Court to take this decision. Let's move on to the next story now, which is a Bloomberg Quint exclusive. The US Pharma watchdog, that's the FDA, has paid a surprise visit at one of Cadilla's plants. Darshan Mehta is standing by with details on that story. Darshan, what do you have?
Yeah, so what happened was this was a surprise visit by the US FDA. Notice was given at a very short notice, and Monday the inspection started. This is what two sources in aware of the development have told us. Basically, what had happened is one of the key drugs that is used to treat seizures, that had significant amount of recalls last year, and that was the bone of contention why the US FDA came and re-inspected. They started this re-inspection of the Moraiya plant of Cadila. This is the largest plant of Moraiya, has the maximum number of approvals, and if you remember, for the past so many years, Cadila has been under a cloud, given the fact that their Moraiya plant did not get any kind of approval because they had a warning letter. What happened last year was this warning letter was lifted and all clear was going to the plant. So this cast a little bit of concern as far as why the US FDA is again re-inspecting the plant, and that is one of the key contention why the counter is weak in today's trade.
All right. Do we have any comment from the company on what the impact could be?
Yeah, so we contacted the company yesterday. We called them also. They did not comment. We emailed them also, and we did this yesterday. So we gave them ample time to reply. They did not reply back to us.
All right. Thanks very much for that, Darshan. So that's Kerala, the stock impacted by news that Darshan has put out saying that there was a surprise visit paid by the US FDA. Hong Kong-based SSG Capital has bought insolvency-hit Bhushan Steel's loans. The stressed asset investor acquired loans worth 2,500 crore rupees from Bank of Baroda and Union Bank. Bloomberg Quint's Vishwanath Nair joins us with details. Why do I need to care about this, Vishwanath?
Well, Bhushan Steel, large company, but 56,000 crores what it owes its financial creditors. So any kind of action in consolidation of these loans, SSG, it's been a stressed asset investor in the Indian stress market for a while. They've been pretty active. They've been buying out a number of loans. When they get into this picture and they start consolidating loans, buying out the other public sector banks, have a better say in how the resolution plan, which is going to be finalized in a few weeks now, how that is going to be implemented. So it's important in that sense. It's a foreign fund. It has interest in a large Indian asset.
SSG will now have a bigger say in the committee of creditors that will decide on the resolution.
Because they control a high portion of the loans.
So how much do they control now?
3,000 odd crore.
Which in percentage terms is how much of the total?
It's a very small percentage of the 56,000 crore for sure.
So then that just literally only gives them what, barely a vote on the table?
Vote on the table, yes.
Okay,
but the fact is that they still have a say in the matter.
Okay.
All of this is done through Acre, which is the Indian ARC that they own.
Okay.
But of course, they own about 49% stake in the company, so they get to call the shots in most of the decisions that Acre would make.
Okay.
So
how much have they bought this for? Do we have any idea on what the indicative price is?
It's about a 50% discount. Both these
50% discount.
Yeah, so about 1,200 crore.
So why are these two banks getting out when they were hopeful of some resolution? Bhushan Steel is right now close to I won't say finalization of bids, but the bids are coming in and it's close to the final steps in the resolution process, at least at the NCLT stage, right?
But individual banks take their decisions depending on how the boards have told them to deal with these large assets, and these assets have been under stress and under restructuring or reconsideration for a very long time now. So maybe potentially the bank boards would have decided to get out of the asset. That's a decision that the board has taken its own. Okay,
I can promise you that there is much more to watch for in the Bhushan Steel story. Wish he's not giving it away because he's still working on that story.
That's right.
This is very small in the larger scheme of things of what's going on at Bhushan Steel.
Yep.
And I'm sure we'll have more updates from him on that. Okay, we're also watching out for three major earnings today. Drug makers Cipla and Aurobindo will be announcing their numbers. And then we've got auto company Eicher Motors. So Darshan and Yatin are standing by with what the markets are pricing in terms of earnings expectation. Yeah, Darshan, let's start first with you with the pharmaceutical companies. What's up?
Yeah, so let's start with Cipla first. Unlike what happened with Lupin, which has a large exposure to the US market, Cipla does not. So their earnings are pretty much not that impacted because of the US generic pricing issue that is there. So on a top line, we are seeing a growth of anywhere between 13%, profits growth of 23%, and as far as the margins are concerned, 20.3% is the margins that we are looking at for Cipla. Basically, in their revenue, as far as India is a big market, so 15 to 20% year-on-year growth on the top line. For the US, we are seeing a growth of 8 to 10%. Europe will be 40 to 50%, and rest of the world and South Africa will be muted this time around. Now, they have launched almost 4 products in the US market. On a low base, they will benefit on the US market. Domestic markets, there are 2 reasons. First of all, the low base of demonetization last time, and the last quarter they came out of the GST impact. So domestic markets are expected to be very, very strong. Over the past few quarters, they are doing significantly in terms of improving operational efficiency, and that will be seen on the EBITDA margin. Now, as far as Aurobindo is concerned, Aurobindo has a large chunk of the business coming in from the US, but despite that, we are seeing a 9% growth in Aurobindo Pharma. As far as profit is concerned, a 14% growth and an 80 basis point improvement in EBITDA margin. Now, the reason that we are saying this is that we are expecting both their businesses, formulation and API, to grow this time around. We are seeing close to $300 million of US sales to come in. Now, they have been hit by competition and pricing issue because 2 of their products, Renvela and Pantoprazole, will be facing a lot of competition. But they have had a slew of launches in the US and in the European market. So that will offset a large chunk of this issue that is there in terms of competition and pricing. They also have a large chunk of injectable products which are high margin products, and that is something that will aid margins for the company.
All right, thanks very much for that, Darshan. Yatin standing by with Eicher Motors. Yatin?
It will be a healthy set of numbers expected from Eicher Motors. Of course, we had almost a 19% sales volume growth for the Royal Enfield end of the business, because of which we are expecting a strong standalone performance, and that will probably aid the overall consolidated performance as well. When it comes to the revenues, we are expecting a healthy 21% growth. Also, profit and EBITDA seen growing by around 25 to 28%. Profit seen at close to 538 crores. Margins also will be healthy this time because of a better sales mix and price hikes that they have done in the Royal Enfield business. So margins are seen at 31.8% versus a level of 31.4% on a year-on-year basis. Of course, apart from the overall management commentary on demand, especially in the commercial vehicle side, we will be watching out for the VECV margin performance, which is expected to be close to 9 to 9.5%. That will be one important figure that we'll be watching out for in the earnings. On an overall basis, expect a healthy set of numbers from Eicher Motors, which will report numbers in a few hours from now.
All right, thanks for that, Yatin. That's what to expect in terms of the earnings coming up this afternoon. It's also the first day of the Delhi Auto Show. It's a biannual event, as you know, where automakers showcase some of their most ambitious projects for the very first time. And at a time when the world's going gaga over electric vehicles, how can India be left behind? So almost all 24 automakers at the Delhi Auto Expo have either displayed or revealed plans of displaying or developing electric vehicles in the near future. But how concrete are these plans, and will electric motorcycles and cars be riding on Indian roads over the next 2 years or anytime soon? Krishanu Mukherjee has more on that.
The theme of the Auto Expo 2018 so far has been electric vehicles. While most companies have unveiled some models, some of them have said that they will soon unveil models or have at least unveiled their plans of unveiling models. The theme has been electric vehicles so far, starting from Maruti Suzuki, which said it's going to launch its first electric vehicle in India by 2020.
Well, as far as the electric vehicle is concerned, we are announced that 2020 will be our first electric vehicle. We are doing a study in the market, trying to understand the customer need, and based on that, we will be making that next step.
Going to Hyundai, which unveiled its first, or actually its only commercial electric vehicle in the world, which is the Ioniq sedan. Then there were companies like Renault which said that they were waiting for more clarity from the government side before unveiling or disclosing their plans of electric vehicles. Now, thus far, the Auto Expo, as always, has seen a lot of unveils. Launches aren't common at Auto Expos. Cars are more often than not unveiled at Auto Expos, and we've been seeing that trend going on, with the key theme being electric vehicles.
So electric, according to me, is an idea whose time has come. Okay, and going forward, we'll see more of electric. Now, let's examine why electric is not, what are the speed breakers in electric vehicle? I think 3, according to me. First is the cost. Cost of battery is high. It is not affordable as of now. Second is range anxiety. People should know how long it can drive, etc. And third is charging infrastructure. And both of you are younger to me, and you know that technology beats everything. So as we speak, a lot of technological innovations are happening. A lot of young guys like you are working on beating this type of technology. Cost of battery, which was $500, has dropped to $150 or $200. It'll go below $100 very shortly. There are people who have...
I'm going to have to interrupt that coverage of the auto show because the Prime Minister is speaking at the Lok Sabha, and I'm sure you'd want to listen into what he has to say.
हमने योजना बनाई, 4 साल लगे रहे, हमने रिकैपिटलाइजेशन पर काम किया है, हमने दुनिया भर के अनुभवों का अध्ययन किया है और देश की बैंकिंग सेक्टर को ताकत दी गई है। ताकत देने के बाद आज मैं पहली बार 4 साल आपके झूठ को झेलता रहा, आज मैं देश के सामने पहली बार ये जानकारियां दे रहा हूं। 18 लाख से 52 लाख, 18 लाख करोड़ से 52 लाख करोड़ लुटा दिया आपने, और आज जो पैसे बढ़ रहे हैं वो उस समय के आपके पाप का ब्याज है। ये हमारी सरकार ने दिए हुए पैसे, ये जो आंकड़ा बढ़ रहा है वो 52 लाख करोड़ पर ब्याज जो लग रहा है उसका है। और देश कभी आपको इस पाप के लिए माफ नहीं करेगा, और कभी न कभी तो ये चीजें, इसका हिसाब देश को आपको देना पड़ेगा। मैं देख रहा हूं हीट और रन वाली राजनीति चल रही है। कीचड़ फेंको और भाग जाओ, कीचड़ फेंको और भाग जाओ। जितना कीचड़ उछालोगे कमल उतना ही ज्यादा खिलने वाला। और उछालो, जितना उछालना है उछाल लो। और इसलिए मैं जरा कहना चाहता हूं, अब इसमें मैं कोई आरोप नहीं करना चाहता, लेकिन देश तय करेगा क्या है। आपने कतर से गैस लेने का 20 साल का कॉन्ट्रैक्ट किया था, और जिस दाम से गैस का कॉन्ट्रैक्ट किया था हमने आकर के कतर से बात की, हमने अपना पक्ष रखा। भारत सरकार बंधी हुई थी, आप जो सौदा कर गए थे हमको उसको निभाना था, क्योंकि देश की सरकार की अपनी विश्वसनीयता होती है। लेकिन हमने उनको तथ्यों के सामने रखा, हमने उनको कन्विंस किया, और मेरे देशवासियों को खुशी होगी अध्यक्ष महोदया, ये पवित्र सदन में मुझे कहते हुए संतोष हो रहा है कि हमने कतार को रिनेगोशिएशन किया, और गैस की जो हम खरीदी करते थे करीब करीब 8,000 करोड़ रुपया देश का हमने बचाया। आपने 8,000 करोड़ ज्यादा दिया था, क्यों दिया, किसके लिए दिया, कैसे दिया, क्या इसके साथ सवालिया निशान खड़े हो सकते, वो देश तय करेगा, मुझे नहीं कहना है। उसी प्रकार से मैं ये भी कहना चाहूंगा, ऑस्ट्रेलिया के अंदर गैस के लिए भारत सरकार का एक सौदा हुआ था, गैस आता उनसे लिया जाता था, हमने उनसे भी नेगोशिएशन किया, लंबे समय का किया, और आपने ऐसा क्यों नहीं किया, हमने 4,000 करोड़ रुपया उसमें भी बचाया, देश के हक का पैसा हमने बचाया। क्यों दिया, किसने दिया, कब दिया, किसके लिए दिया, किस हेतु से दिया, ये सारे सवालों के जवाब आप तो कभी देंगे नहीं, मुझे मालूम है।
All right, that's the Prime Minister speaking in Lok Sabha, blaming the UPA squarely for the NPA problem that the country is facing. We'll continue to track what he has to say. You'll see it at the bottom band of our screen and also across our social media. But for now, we want to wrap up this edition of Power Lunch. Up next, you're going to listen into a special discussion on what the money markets expect from today's monetary policy announcement. Ira and Neeraj spoke with Manish Vadhavan of HSBC India and Ashish Parthasarathy of HDFC Bank. You want to stay tuned for that.
Nine to 5 job, अरे 5 to 9 job, भाग दौड़ all the time job. The roaming वाला job, the deadline वाला job, or are you living in the market वाला job?
Life is full of options. Choose a job and earn on your own terms. Choose to become an LIC agent. It's more than a job. It's career insurance. Be your own boss. Be an LIC agent. Ab life set hai.
RP Sanjeev Goenka Group, growing legacies.
City Union Bank, trust and excellence since 1904. City Union Bank, trust and excellence since 1904.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people.
You're watching Bloomberg Quint. It's monetary policy day, and while a lot of people will tell you that there is no change in the headline interest rate expected, this is an interesting policy, especially given the backdrop of the money markets that persists. Joining us to talk about some of that backdrop and what the MPC should be looking at, two of the best voices in the Indian money markets, Ashish Parthasarathi of HDFC Bank and Manish Vadhavan of HSBC, joining us here to discuss all the aspects that will go into the decision this time around. Ashish, I'm going to start with you. Good morning. It's been a while since we've had you on. So let me just ask you for your backdrop as you see it to this Monetary Policy Committee decision. I know no headline change in rates is expected, but it's a complex situation given what's been happening in the bond markets.
Good morning. Yeah, I think, the bond market has seen a kind of carnage, I would say. However, if you look at the monetary backdrop to the monetary policy, let's see how things are. You have, if you first look at the global scenario, the global interest rates are looking to move higher. Liquidity is going to become lesser very clearly, and even now the market expects they're pricing at a small probability of 4 rate hikes during this calendar year in the US. Oil prices are high. They've obviously stabilized around this level, but they are around the 65 to 70 levels, which is higher than what it was a few months back. The budget, there has been fiscal slippage this financial year. The next fiscal target, is the same or actually higher than what it should have been for this fiscal year. Fourthly, you are seeing there is a likelihood of inflation panning out to be higher because the government has said that they would look to hike MSPs, and there are other expenditures in the offing which could possibly lead to further fiscal slippage. Given all this backdrop, I think while we also don't expect any rate action, I think the policy language would flag all these risks to upside risks to inflation, and is likely to be more hawkish than we have heard RBI in the past policies. And they won't change their stance, they won't touch rates, but I think the market is likely to take an indication that the rate hikes are around the corner.
Manish, do you broadly agree with that view? I noted that some of the foreign brokerages in particular seem to be saying that we are overdoing these inflation risks. Are you on with your foreign peers, or are you with the broader market, which seems to suggest that a hawkish stance is now justified?
Morning, Ira. I think we are in line with what Ashish is mentioning. All these factors have come into play in the last 2 or 3 months, and they are getting manifested in the prices also. I would tend to agree that the policy, we do not expect any kind of a rate hike today, but definitely the stance, the language could point out to all these kind of risks. And market may take some kind of cues from this kind of a policy statement. The other thing which is important today is the markets have actually factored in quite a lot in terms of this, hawkish expectations. So there would be the challenge or key where we'll have to balance it out, because yields have already moved up something like 100 basis points in the last 6 months, and even the short-end yields have started going up. The derivatives curve is pointing out to something like 2 rate hikes in the next in this current year. So all these things now, how much does it fructify, and at what time does it fructify, we need to see. But yes, I think the policy stance or policy, the language is going to be a bit tough on interest rates.
Ashish, you think we could see at least one rate hike this fiscal year or the next fiscal year, that's 2018-19, if not 2, as Manish was pointing out, the derivative markets may be suggesting?
So we have penciled in at least 1 rate hike during the year. We think there is a small probability of a second rate hike, but at this point in time we are saying it will be a 1 rate hike. I think obviously everything will depend on numbers, especially inflation numbers, as they pan out.
So you don't think that inflation will come off once the base effect, and Ashish, I'll just stay with you, once the base effect plays itself out? Your house call is that there will be other pressures which will push up inflation towards, what, 5% or above that?
So the way we are looking at, there is a base effect. We expect inflation to peak around June, July, and then come off. But the average inflation of the year would be around 5%. So while there would be the numbers in year-on-year numbers will change depending on the base, but the average inflation is likely to be around 5% and with upward risk. So we don't see why. We think there is a good chance of one rate hike at least.
So Manish, we were having this debate the other day, just with internally. So the target is, of course, 4% plus minus 2%. Is the market now fairly clear that they're going to target the midpoint? I think the debate was that, maybe they could look through some pressures that may be emerging on the fiscal side because it's, linked to structural reforms. Maybe they'll be forgiving of, an inflation range between 4 to 5% and not try and target 4%. But the flip side to that was that, they've just gotten into this inflation targeting framework. If they don't even achieve 4% in a durable manner now, then what is the credibility of the framework?
No, absolutely fine what you're saying. You're raising a very pertinent point here because the MPC's first test is going to be there in April policy, not today, I would say, because till now the inflation target has been between 420 to 470, or the range is 430 to 480. If theoretically what is being anticipated, if the overall target is moved from this range to 480 to 5.5 for the next 6 months, whether the MPC would wait to see a 6% number before hiking rates, or they would hike rates beforehand so that they can curtail it to 4%. Frankly, it's an uncharted territory for markets and for this new dispensation in form of the MPC at RBI. But I personally expect that if the inflation range is going to move from 430, 480 to say 485.5, then definitely RBI will have to change its stance somewhere in terms of liquidity or in terms of the rates. Coincidentally, in the last 6 months, the kind of moves which have happened in the money markets, starting from the short end to the long end, and also because of a lot of other factors, we have seen the impact already quite a lot in the markets. Now, whether RBI would follow it up with actually rate hikes or change the stance as and when necessary, I personally feel that if the inflation target is going to move to a higher range, you might see some action from RBI. And one thing I would like to point out here is that, there is, I know the market is divided at this moment, and there are some houses calling for that we have overdone and because of extraneous factors and whatnot. But these are longer cycles. Interest rate cycles don't move, in 1 month, 2 month, or 3 month, or 6 month. We have come down from a repo rate of 8% to 6%. If we all agree that, we have reached the bottom of the interest rate cycle because of all the factors of Fed and the way Eurozone, we have been hearing the comments from ECB that there may not be any further need for this kind of a accommodative stance and whatnot. So if everything changes and the interest rate cycle moves, then it doesn't stop at one rate hike. So, this jury is still out. I'm not suggesting that April rate hike will happen in the next June or whatever. But if the rate cycle turns around, then it won't stop at one rate hike itself. Then it will move by at least 4 rate hikes to adjust to something like 7%. But that may not happen now. That may happen, 6 months down the line, 1 year down the line, I don't know. But these are long cycles. So if the cycle is going to reverse, then don't expect that it'll stop at one rate hike.
No, Ashish, come in on that. It's an interesting debate. I know slightly theoretical, not the immediate decision related, but it is an interesting debate as to what this next rate cycle will look like, right? Given the inflation targeting framework in which we now operate.
So, my view on this is, this is a new framework. Yes, we need to see how they will proceed on this framework. But, however, one thing is reasonably clear. All central banks and all monetary policy committees like to have their credibility in place. If they have been given an inflation targeting mandate, they need to be seen to, act so that that mandate is what they are targeting. So I think yes, there will be rate hikes, but I'm not sure whether there will be a cycle, because while we have seen cycles in the past, the overall world scenario, global scenario has changed so much. We were, some time back we were fighting deflation, and now of course we are seeing signs of inflation. However, even in the US, the rate cycle is very, gradual, and even the terminal rates are significantly lower than what they would have been in the past. So we could see hikes, but we could see, I would put it that way, that we would see hikes, but you would see long pauses between hikes. I don't think I expect a rate hiking cycle in that sense of the word.
Just bringing the attention back to what the markets are worried about. Ashish, staying with you on this one. On the liquidity side, is the market expecting any comfort from the RBI or the MPC statement this time around? I point to the fact that at the last press conference, Urjit Patel said that, look, call money markets rate are near the repo at 6%, so there's no liquidity problem as he sees it.
So if you look at the primary liquidity, there is no problem. You have liquidity surplus today would be around 30,000-40,000. That is more in line with the neutral liquidity stance which RBI has spelled out. The overnight rates are where they are, so and they are close to the policy rate. So there nothing needs to be done on the liquidity per se on the primary liquidity side. However, if you look at the bank's balance sheets, what has happened is you had an increase in the LCR requirement from January 1, increased by 10%. In India, we have this, we have an SLR requirement also, and we have an LCR. In the past, RBI has allowed some leeway where part of the mandated SLR could be used to, reckon against your LCR requirements. But they have not done anything this time. So effectively, what it has done to the system, it is actually increased the reserve requirements from Jan 1, effectively. That has nothing to do with the primary liquidity. So we don't know whether is that a deliberate step, or they were waiting to see how things pan out and they would give some relief in this policy. Very difficult to call on that, but the stated objective of the RBI is that eventually you should not be having two kind of reserves, an SLR as well as LCR. If globally everyone is moving to LCR, we would need to move to only LCR at some point in time in the future.
Manish, do you think they'll tackle that issue that Ashish is flagging off? If so, how?
In terms of liquidity, yes, I would tend to agree that liquidity has tightened. In fact, I would use the word the financial conditions in India have actually tightened over the last 6 months. If you look at the incremental credit deposit ratio, which is hovering around 1.4, and the amount of money which was going in reverse repos have drastically reduced, we have nearly reached a neutrality kind of a stage, though RBI didn't agree at the last meeting on the same, but it's the surplus of plus minus 1% of NDTL what we talk about, which is around 1 lakh crore borrowing or 1 lakh crore lending by the banking system to RBI or borrowing from RBI. I don't see any kind of a step coming in that regard from RBI today. I think yes, this is a very, very important issue now at the moment with banks, that with the new LCR norms coming up and we are headed towards a 90% requirement, and with SLR continuously being reduced, how much of excess SLR would the banking system require to hold? And that would be determining the overall liquidity scenario in the money markets itself. I still feel that by design or by stealth, if you look at, they have already adjusted the liquidity in the system. It has also been on account of the remonetization of the system. What you look at, the currency which was deposited in the banking system one year, 3 months back, is now fully back with the system itself. So it is speaking for itself. I think we have reached a stage wherein we are on a neutral kind of a stage. It will depend on what kind of stance RBI takes from here onwards in the next 6 months, and that would determine the liquidity stance also. So basically what I'm trying to say is that if we expect a harsh stance in the sense in form of for rates or for inflation today, then don't expect any kind of a liquidity measure which would alleviate this. We might stay with this kind of a thing and see the final move in April.
Okay, Manish, good morning, Neeraj here. You know, certain quarters of the market were hoping, if not believing, that maybe the budget could do something to bring the bond yields to a more reasonable level, because the bond markets, probably in India as in the US, are leading what the rate decisions could be. Now, is there anything that the RBI will do, not necessarily needs to do, but will do over the course of this policy or the next, which may calm the markets down a bit? Because as of now, from whatever little we are hearing, the tone will be hawkish. And I heard Ashish mention as well that there is an outside chance of another rate hike coming in this the next financial year as well, something that the markets are probably not prepared for.
Yeah, Neeraj, this has been the debate in markets today. The yields have blown up around 100 basis points in the last 6 months. And that's a cause of worry for the overall financial system also. The kind of AFS portfolio hits which the banking system is taking is also pretty large. But frankly, I do not have any answer to this. What can actually be done? We all know what measures can be done. But whether RBI would take them or not, it's a $1 million question. Today we would come to know. Looking at last 6 months, it seems that RBI may not oblige on those fronts in the near future. Because if their stance is going to be moving from neutral to, say, hawkish or, say, tightening mode, or even if they stay neutral with this kind of a bias, why do you expect RBI to come into this? There are some other technical factors also which have played a role in this kind of a thing. You know, if the SLR is going to be, requirement is 19.5% and the banking system is holding around 29.5 or 30%, 10% excess SLR, there is definitely no fresh requirement. And also in conjunction with liquidity getting tighter, the reasons to deploy that surplus is also becoming, it's not required. Plus, I think what we forget is, even though the budget talks about only 3.3% and the government borrowing, frankly, on central government borrowings have remained more or less stable for the last 2.5 years, it is the state government borrowing which has hit the system quite badly, because they were borrowing only something like 1.5 to 1,75,000 crores 2 years back. This year, the gross borrowing of states is around 4,25,000, which counts for SLR, which satiates the demand for insurance companies and provident funds. So, from an overall borrowing of something like 8 lakh crore, we are going to be something like 11.5 lakh crores, including state government and central government. So this shift of borrowings has moved towards state governments and the way it is being managed between the center and state. Net-net, where I'm coming from is the supply has been higher for the system. And this year, coincidentally, if you look at, I think Ashish would corroborate that, the deposits are not growing at that pace.
Yeah.
And the credit has actually grown. So it's a combination of all these things which are leading to this kind of a thing. Yes, the usual suspects are there. People have been talking about OMO. People have been talking about, you know, some kind of switches being done by RBI. But that, I would say, we'll have to wait and watch what RBI does today. Besides the normal switches or the buybacks, which the central government is, you know, they have put it in the budget. Okay. But beyond that, I am doubtful that you're going to see anything from RBI today.